Hello, and welcome to another episode of the Market Snapshot series. My name is Rufas Kamau, Market Analyst at FX Pesa. So today we are going to be looking at the current market events, what's currently impacting the markets, what are the news to expect the day for the day. We'll also be looking at the technical analysis charts, key trends, key developments, and expected movements. Once we are through with it, hopefully everyone gets to grab something. So, as usual, we know that this is not investment advice. It's purely educational. So always do your own due diligence, your own research, and practice proper risk management. So before I proceed, I would like to do a mic test. So if you can hear me clearly, kindly type hi in the live comment section. And please confirm that everything is working just fine. Awesome. So, hello, Ian. Thank you. Thank you for your response. I appreciate this. So let's get started by focusing on the economic calendar and try to understand the key events of the day. So I understand these are three major events that are expected to be impacting the markets today. So the first event will be the GBP, and the first event will be affecting the UK pound. This, unfortunately, has already happened. It was due to come out at 10 a.m. And this is in regards to the job market report. We are expecting three data points from this report, the first one being the claimant count change. So this is the number of people claiming for unemployment insurance for the first time. And in this case, we are focusing on the month of December. So in December, there was 11,700 people basically claiming for unemployment insurance for the first time in the UK. And this was slightly lower than the expectation of 18,100, and the previous reading was 0.6K. So what this means is that unemployment is on the rise. You only claim for unemployment insurance when you don't have a job. And it basically shows that the job market conditions are softening in the UK. For the second data point is the average hourly earnings. And this is a quarter over year. So in the previous reading, it was a 7% increase. We expected this to slow down to 6.8%, but the actual report was at 6.5%. So this basically shows that wage growth is slowing down in the UK. And of course, this is consistent with what the Bank of England is looking to achieve. So the unemployment rate remains largely the same at 4.2%. And this is a good outcome to kickstart the week. So looking at the markets and trying to understand how the GBP reacted, we'll be focusing on just one pair, which is GBP USD, which yesterday we had analyzed and identified that there was a key level support that was holding since the beginning of the year. That was about 2 weeks ago. And with this support being broken, we expected to see some further downside in pound USD. So eventually the market got to the target point. It was around 126,848. And now, after the news this morning, we are seeing some further downside momentum in our pound USD. And now we might start focusing on other key price levels that might work as a target for a nation selling trader. So in this case, 1.26 to 826, like a very good support to work with as a target. So there's still more room for downside, expecting that the pound continues sliding against the dollar. So main reason that the market is reacting this way is one, the dollar index is pretty strong. As you can see, since midnight, we are seeing a pretty strong dollar index. And dollar index combined with a weak pound now leads to the big sell-off we are seeing here. The pound is weakening because the job market report was consistent with the Bank of England expectations. And if the job market is softening, it means that the Bank of England may consider cutting rates as soon as the first quarter of this year. So speculation that the Bank of England will be cutting interest rates is leading to a much weaker pound. So there's still more room for downside. I expect to see the pound continuing to drop and potentially get 1.26 to 82 price level. So the second event of the day will be later during the New York Open. And this is when we'll be majorly focusing on Canadian Consumer Price Index, or CPI, which is a measure of inflation in Canada. So month over month, we expect that prices weakened by negative 0.3% in December. So for a better outlook for Canadian inflation, I prefer using the trending calendar. So I'll be sharing these shortly. So here it is. So I want to move here so that we can focus on the inflation rate year over year. So in the previous reading, it was 3.1%, and we're expecting that this data may have moved higher to 3.4% in the month of December. So we already saw something happening in a similar manner last week, where US inflation, which was moving downwards and had hit a 5-month low of 3.1%, happened to make a surprise spike to 3.4%. And now we're expecting something similar in Canada. So if this plays out as expected, and we see 3.4% inflation rate in Canada, then it basically means that inflation is on the rise again, and the Bank of Canada may not consider cutting interest rates. So high interest rates basically means that there's high yields on Canadian bonds, and as a result, a higher demand for bonds, higher demand for treasuries is usually considered as positive for the currency. So as long as there is potential of interest rates staying higher for longer, then you expect the local currency to continue strengthening. So core inflation is expected to remain the same at 2.8%, whereas the change in the inflation rate month over month is expected to be down negative 0.3%. We had a previous increase of 0.1% in November. So median CPI 3.4% is expected to remain the same, whereas the trimmed mean CPI year over year is expected to remain the same, also at 3.5%. So with that in mind, then we know what to expect. So looking at Canadian dollar pairs, then you can already see that trying to open USD card pair, you can already see the dollar skyrocketing and rising higher against the Canadian dollar. But then this trend is easily reversed. But then if inflation comes in stronger than expected, and that leads to a strengthening of the Canadian dollar, I don't think USD CAD would be the best pair to trade because the dollar is also strong in the markets. So I would consider something like CAD JPY as a potential target to trade. So in this case, we know that the yen has been pretty weak in the market. So if you're looking to trade a strong currency against a weak currency, then it would make more sense to trade JPY. So in this case, we potentially see a strong bullish momentum arising from this. And already we can see that the market is pulling back along a trend line that started at the beginning of the year. And this was the 2nd of January. Every time the market has gotten to this trend line, it has found strong support and moved higher. And in this case, if we get a higher than expected inflation report in Canada, then potentially we would be seeing the market making a rally and forming a new high for the year. So potentially, you can see there's an upper trend line here, which has been acting as resistance. So the market could easily bounce from the lower trend line and then bounce and get back to the upper trend line. So in this case, a potential move from this price level all the way up would be in the books. And this is based on the expectation that inflation in Canada moves higher in December. So that's one of the key expectations. But then there's also the other side of the story where inflation could have subsided. Maybe it's slower than expected. And in that case, it would weaken the Canadian dollar and we could see the market dropping further downwards. So in case I'm right and inflation comes in hotter than expected, then the target level is around 109.451 for CAD JPY pair. But then, if we see a much weaker Canadian dollar as a result of inflation moving as expected, then it might make more sense to trade the USD CAD currency pair. So, for USD CAD, go to before our chart, you can already see the market is making a very strong progression. So, from the 4-hour chart, you can already see there was a prevailing trend line, which was acting as a resistance, and it was broken earlier yesterday. Now that the price is progressing higher, there's still more room for upside, and I believe we'll be seeing that the market may be testing the previous high of 1.36177. So we could be seeing an acceleration of price towards this area. So as we speak right now, it's already testing a key level support. And if it breaks this area, then the target becomes 1.36177. So that's an important distinction to note, that if news comes out and the Canadian dollar happens to be weakening, the best currency pair to trade most likely be USD CAD. But then the opposite, strengthening Canadian dollar, you might want to consider trading the CAD JPY currency pair. So the third event that we will be expecting today will be a speech from the Bank of England Governor Bailey, and this is at 6 p.m. But also consider that we'll also be looking at Empire State Manufacturing Index in the US. So Empire State is a nickname for New York. So in this case, we will be looking at the manufacturing index at 4:30 p.m. still. So this basically shows the manufacturing conditions in New York as a leading indicator of the manufacturing conditions in the entire country of the US. So in this case, the previous reading was a negative 14.5, and we're expecting this to improve to negative 4.9. So manufacturing conditions tend to be a key economic indicator showing how the economy is performing. So if manufacturing conditions are improving, then it tends to be positive for both the currency and equities. So we could be seeing the equities reacting to this information positively. So if we see such a huge improvement in our New York manufacturing index, then the dollar could continue the current trend of strengthening. But then if it misses expectations, then we could be seeing the dollars taking a step back, and of course, US equity indices taking a step back. So on the other hand, the speech by the Bank of England Governor Bailey will be happening at 6 p.m. And he's due to testify on the UK economy before the Lord's Economic Affairs Committee in London. And there's a good likelihood that he might mention stuff about monetary policy in the UK that might increase volatility in the pound pairs. So this is something you might want to consider following through, because it could bring in some much needed volatility. So lastly, there will be a speech from FOMC member Waller in the US, and these will be happening at 7 p.m. So Waller is about to speak about the economic outlook and monetary policy at the Brookings Institution in Washington, D.C. And of course, he will be responding to questions, and any commentary would cause some volatility in the US dollar. So those are the key highlights events for the day. I don't think there's any more events that are more important than that. And now that we've covered that, it's time we cover some more technical analysis on other pairs. So first things first, for the better part of the year, the dollar index was trading within a range, with the upper bound being 102.49 and the lower bound being 101.73. So early this morning, just after midnight, the market managed to break above that range and is now higher, basically indicating that buyers are now in control, pumping the dollar even higher. So from the interest rates perspective, we know that the market is pricing in a potential hold, meaning that the Fed may not hike interest rates on its next meeting. So the next Fed meeting will be happening on the 31st of January this year, and the market is pricing in a 95.3% possibility The Fed will keep rates steady at the current level of between 5.25% and 5.50%. So these rates are significantly high, and they tend to be positively correlated with the bond yields. So with the bonds remaining currently, the bond yields currently are significantly high, then it attracts out of investors, especially for short-term US treasuries. So with this in mind, we know that if the Fed holds interest rates at the current level, then investors will be buying more of these bonds. Then in that case, we tend to see the dollar strengthening against other currencies. So with a strong dollar in mind, look at these other pairs. We will see a potential reversal continuing in these pairs. For instance, for USDN, better part of last year, that is the last quarter of last year, the dollar was losing to the Japanese yen. But then, since the beginning of this year, we saw the first week, the dollar being pretty strong against the yen, pulled back and then continued, pulled back and then continued, and now we are about to retest a bigger resistance level. So the resistance level is clearly the last high that we saw last week. So if you go to a smaller time frame, say the 1 hour chart, you can see that the resistance is at 146.391. So from 4 perspective, there's this expectation that this next leg is higher and creates a higher high, and the potential target is now 147.142, with a key observation of how price reacts once it gets to last week's high, because it will also reverse from here. So it's very important we observe how the price might perform once it gets to this level. So for Euro USD, this is what we are seeing. We already discussed this, that the market was unable to form higher highs and the potential for a breakout was there. It's something we discussed yesterday during the snapshot. So eventually the market broke towards the lower side and is now showing signs of continuation. And there's that potential that the market keeps going and gets to the base of this pattern. The base of this pattern is the low that we saw on the 3rd of January. So there's still more room for downside momentum for Euro USD. In this case, betting on a stronger dollar. So for Pound USD, we already discussed this. So for USD CAD, we have covered this. Now for gold, we mentioned that there was a strong momentum happening towards the end of last week, but now we are betting on a reversal, especially considering that we are seeing a much stronger dollar. So a strong dollar trading against gold basically means that we would be seeing the market changing and making a strong pullback. The target becomes $2,033 per ounce of gold. And this was the breaking point from this particular trend line. So this is when the market broke this area and moved higher. And of course, we know that from a technical analysis point of view, it's usually likely that the market may retest the breaking point. And in this case, after getting to this area, then yesterday failing to form a higher high, then a new low might be on the books for today. So for AUD-USD, we had a clean break of this support area here, and then we had this trend line forming on the 4-hour chart. And yesterday, during the market snapshot, talked about how the market may now head towards this trend line. Once the trend line is tested, then from there, make a decision based on the price action. So we could be seeing the market forming some form of bounce or eventually breaking below this trend line. So in this case, the area that is most important to watch is the current price action level. Trying to gauge whether the market will break or bounce from this area. So it's a key decision point. Don't know what will happen yet. So at this area, we just observe and see what the price action will do. But with a strong dollar in the market, it's quite likely that the market may break below this trend line. So US equity indices mentioned that the pullback is due. So after the market, of course, seeing some volatility last week, then yesterday trading sideways, we expected the market to make a reversal, and now the reversal is playing out. So since morning or since midnight, all we are seeing is a big sell-off, and the market is potentially headed for this particular support area at $16,545 per share of the Nasdaq. So there's a good likelihood that this continues. And of course, remember yesterday was a public holiday in the US where they were celebrating the Martin Luther King Jr. Day. And during that time, stocks were not open. ordinary indices were tradable, but then they were trading on low volatility. So if you look at the summary of yesterday's price action, market here, moving high and then up and then down, this is more of a sideways momentum. I wouldn't say that price was strongly trending in one direction. It was just basically moving up, down, and sideways. But then today, it's a clear unidirectional move, indicating that the equity markets are weak. And then from the data that we are seeing, it's basically indicating that there's a good likelihood that the Fed will hold rates at the current level. For Fed holding rates higher for longer, it's not good for equities. Equities might benefit more the Fed cutting rates, which would make capital cheaper. So as a result, we are seeing this pullback happening. And remember, it's kind of cyclical. First week of the year, the Nasdaq was moving downwards. Second week, a recovery, and then third week, it seems we're moving back downwards. In this case, the immediate short-term target, of course, last week's low around this area here is 16,612, but then it seems to be more potent to target even lower at 16,545. So we're also seeing a big sell-off happening in the Dow Jones. So if I was to remove all this noise, zoom out my chart, and this is my 1 hour chart, then you'll notice that this is a major resistance that was tested several times. The market was clearly unable to break above this area here. We've had several support areas in this chart, and I think this is pretty much important. The market is now attempting to break below that, which might lead to some further sell-off, maybe even dropping to these areas here. So a good likelihood that the market drops and keeps going. Sorry for that. Drops and keeps going and potentially getting to that 7,240. Then for the S&P 500, clearly unable to form higher highs, then the potential for a reversal is now playing out. So from the price action we are seeing here, it's also the same thing. Market finding resistance along these areas here, attempting to break several times, failing to do that, and now we are headed back downwards. So from the most recent lows in the market, it seems likely that the market is going to test this area here. So if you go to the 15-minute chart, you zoom out, then you can see the price action last week. Then yesterday, nothing much was happening. And now we are retesting a key level here, which is a support area that has seen the market bounce twice. So I would be very keen trading around this area and make a decision once the market gets here, and then leaves either to the upper side or to the lower side. So from the 15-minute chart, I think the move has already happened. Then how price reacts around this area will determine the next direction. So for oil, it seems like we enjoyed some big sell-off. That was Friday, and of course, yesterday we saw some bigger sell-off. But then the market seems to be responding well and finding some support from yesterday's lows. So in this case, we are still within this sideways range or sideways momentum. So even if the market, let's say, pulls back and gets to this area, the idea is to look for another short selling position because the market is clearly ranging. Don't have a straightforward direction since the beginning of the year. So looking at 28th of December last year, then extending this price action to what we are seeing today, seems that like there's a slight momentum upwards, but overall it's a sideways momentum. So European equities have had quite a big sell-off. I think this is a pretty strong rejection of lower prices. So if this candlestick was to cross like this, the long tail here indicates a strong rejection of lower prices, which might be bullish for the French 40 index. So in this case, I would be considering this candlestick and watching closely towards the end of the hour. And if it closes near the open, then the likelihood is that the market goes back upwards. But then the momentum overall seems to be clearly bearish. So unless the market closes near the open of this candlestick, the assumption is that the trend continues downwards. So in this case, the market just tested a key level support, more of a liquidity grab around this area here. And after getting to do that, then we are seeing the reversal happening. So the potential for a bullish momentum would make more sense than a bearish trade. So you can see several times when that happened some time back, So market makes a big sell-off, leaves a very long tail on the lower side, and immediately after that, it changes direction and moves up. So a similar thing could be playing out for the French 40 index. So there is still some likelihood that the market bounces from here. So for the Euro 50 index, it's also doing the same thing. So targets that we had set yesterday have already been hit. I remember the target was here, so the market dropped and got to target. And now it went all the way down, closed through the previous low, and now a strong rejection of lower prices. So the market might be finding some support here. Of course, for the UK 100, it's a similar story. So the idea was to see the market bouncing off this area here. So the market made a big spike downwards and then immediately rejected. And now for the current candlestick, we are seeing buyers coming in. So depending on how the candlestick closes at the top of the hour, we might have to make a decision based on that. Then next asset is Bitcoin. We mentioned that this is a pretty strong support area, especially considering the previous support levels that have been playing around this trend line. So the potential for a reversal and the fact that the ETFs are beginning their second day of trading today, having traded on Friday, and then on Monday not traded because of the public holiday, then demand for the upside would be ramping up, and the potential for a good rally might be playing out later in the day today. So for New Zealand USD, there was a big drop. We broke the trend line, but then the market is struggling to down lower. But then from what we are seeing with the dollar index being pretty strong, the potential for the market keeping on going downwards is still there. So there's still room for further downside momentum, and the market could potentially head to this particular support around 0.60883. So that being said, it gets us to the end of the presentation for the day. So I'll be checking to see if you guys had any questions. So far, I don't see any questions in the comment section. Hello, Charlie. Hello, Moses. Hello, J-Scone, Willie, and Kirote. Thank you, guys. Thank you for your participation. Thank you for tuning in, and I hope you enjoy the rest of your day. Have a peaceful day, and stay calm.